Today on Ask and Answered, we have an insurance and financial planning expert. What do you do as far as a long-term strategy to navigate the current volatile markets? How do you ride out the current volatility? What are some of the best investing opportunities right now in the market? Come find out on Ask and Answered. Okay, hi everybody. This is Richard Wong with Viridian Mortgage, and I'm here today with Tammy Plotkin-Oren of TPO Financial and Insurance Services, where she specializes in asset protection, life, disability, long-term care insurance, and really just offers the peace of mind to her clients who are just thinking ahead in the future, thinking about retirement planning. She's a great resource, super smart gal, graduate of Cal, both in undergrad as a business economics major and is also an MBA from Cal as well. So Tammy, welcome. How are you doing?
I'm doing as well as one can do in this COVID-19 era that we're in.
Yes, and you are actually dialing in from your office in Berkeley, right?
I am. I'm incredibly grateful that I am sheltering in place all day long in my office in Berkeley. My staff is working remotely. I have 3 teenage daughters distance learning from home, and so they can do a better job at home and I can do a better job in my office.
So tell us, when did the sheltering start for you as far as your office? When did you have to send people home?
Yeah, I mean, we started as soon as, I think it was the second week in March. I mean, things started looking bad, and one of my staff members lives in San Francisco, and he takes BART every day, and I just didn't want any risk at all. So I have 2 team members who work with me full time in my office that are now working remotely, and I have an outsourced, what I call outsourced paraplanner who helps with a lot of my financial planning, who's in Pittsburgh anyways. So we have been working remotely in that sort of environment for a long time with him.
Great. And how has that changed, the onboarding process with new clients, or even meeting with clients and reviewing their individual financial pictures?
Yeah, I mean, we have all become Zoom experts, or are all quickly becoming Zoom experts.
That's for sure.
And I have to say, it's being able to have a lot of, shorter review meetings with clients on a daily basis has been amazing. It's been an amazing resource for clients. And it's going to be interesting to see when we get to the other side of this, how much I continue doing virtually versus having clients come into my office. I mean, it's,
right.
I'm in a business where a lot of clients really do like to meet in person, but I think people are becoming very comfortable with doing the virtual video.
Yeah, let's talk about the market now. Things started to get really interesting the end of February, and then we went into pretty much a nosedive with huge fluctuations in the market in the beginning and middle of March, and then a sort of bounce back in April. What's the latest market update? What are the trends that you're seeing?
Well, I wish I could tell you that I knew where things were going, but anyone that says they can obviously can't. I mean, I think what we all agree is that we're in for continued volatility. And the volatility swings day to day, week to week, month to month, can make anyone crazy. There definitely seems to be a disconnect between the general economy and the stock market. The stock market is forward looking, right? So as we've had these terrible unemployment numbers come out this week and the market has continued to go up, I've had clients say, how does this work? Are we in a U-shaped recovery? Is it a V-shaped recovery? Is it a W-shaped recovery? I think today, earlier this week, someone was mentioning, oh no, it's going to be more like the Nike swoosh type recovery. We don't know. I think it all of this for my clients really comes down to cash flow. Are they okay with cash flow for the next 3 to 6 months? Are their accounts well diversified to begin with? I feel really lucky that I spent a lot of time in 2019 helping clients become a little bit more conservative and pulling some of the profits out of their accounts, not because I was expecting a pandemic, but because we were, 10 years into a bull market. So I'm thankful that I don't have clients panicking and pulling money out of the market, because that is obviously the worst thing to do is is to react out of a panic mode. But I think it's important that clients review their accounts with their advisors, and it all comes back to, has their own situation changed?
And speaking of like selling equities in a panic, what other mistakes have you seen or have you read about?
I think it's been really interesting. On any given day, I can talk to one client who is very anxious and worried about the market continuing to go down. And I can talk to another client who says, I've been on the sidelines and I'm ready to get in big because I think the market's on sale. You know, everyone is experiencing this pandemic in different ways. Everyone's experiencing what this means for their financial plans in different ways. I think because of the volatility, both up and down, you just want to be thoughtful about whether it's getting out of the market or getting in. So, you know, I had a client open up a significant investment account, and we put part of it in the market, and we're dollar cost averaging the rest of it over an extended period of time, because it's a mistake also to get too heavy. I mean, nobody can time the market going in or going out. So it's
not like a specific period in time, or maybe even a specific investment opportunity. And for those who don't know, just can you explain dollar cost averaging really quick?
Absolutely. So dollar cost averaging, the easiest way to explain it is what most people do with their 401ks or 403bs, where they put the same amount, you know, every month or a couple times a month into the market, regardless of what the market's doing. So actually, when we're in a dip, that same $1,000 buys you more. It's almost like buying on sale. And so you're not trying to time the market, and that allows you to just kind of diversify out the risk from a timing standpoint.
Yeah, I wish there was a way to do that in mortgage, actually, but I haven't thought of the right solution yet. But it really does offer a lot of peace of mind, because you're not trying to like going through the frustrating process of trying to time the market. Have you gotten a lot of questions about like, oh, what's the best thing I can invest in right now, especially when the market was at its lows in March? And is that even an appropriate question?
I mean, the only times, every now and then a client will say, you know, it's very, you know, my neighbor said it's time to get in gold. My father-in-law said it's time to, you know, put all my money in Zoom, or whatever the case is. I'm not, and, you know, most of my clients have worked with me long enough to know that, you know, if they want to have some side accounts where they're buying, you know, Zoom or gold or individual equities, I always like
I hear Bitcoin is back.
That can be their play money.
I hear Bitcoin is back.
Right, exactly. But, you know, for the most part, we are working together with professional, you know, money managers in well-diversified portfolios, depending on their time horizon and their risk tolerance and their tax consequences. That's really what my job is. It's to work with my clients to make sure that whatever they're in really fits where they are as far as using the money and their risk tolerance.
Have you been in the unfortunate situation of having to talk somebody down from the ledge? If anyone has been laid off or furloughed or?
Absolutely. And it's interesting. The ones who I have talked off the ledge are actually not the ones who have been laid off and furloughed. It's what I always call the nervous Nellies. And so it's my job to remind them, you're not planning on touching this for 15 years. And here's why we're going to do what we're going to do. We definitely have had some clients where we've modified how aggressive their portfolio is, which is very different than just pulling everything out of the market. You know, and it's my job to also remind clients, you know, if you do this, here are the tax consequences, you know, and there's different approaches of, you know, for some people, just the peace of mind of knowing that we've taken them down one notch in their risk tolerance is enough.
Right.
Yeah, but Richard, you pointed out the hardest part, I think, right now is for someone who has been furloughed, laid off, clients of mine who are small business owners who have had to shut down their businesses due to shelter in place. That's a really different situation. And when they have cash flow needs and liquidity needs, even if it's not the right time to get out of the market, the last thing I want them to do is delay a month or two, because again, volatility, the market could continue to go down. So it's back to everyone's unique situation.
As you had mentioned, like cash is king right now. What has been your advice to people who just need cash right now?
I mean, I have had clients tap into equity lines. I
Hmm.
have, I mean, I
Which
have,
went down 1.5% after the Fed decreased
that's
it,
right.
right?
That's right. For all my clients who are sole proprietors or, independents or business owners, I mean, they've had a lot of success in getting access to these PPP loans/grants, and that's been super helpful. I had a lot who were really discouraged after the first round not getting it, but with the second round, I feel like I think almost all my clients who have tried, except for one or two, have gotten it. And that's been a
Good.
huge relief from just a cash flow standpoint to be able to continue to pay their staff, et cetera.
Right.
And most of my clients for years, I'm always saying, make sure you have enough cash reserves, make sure you have enough cash reserves. So luckily I haven't had many people in dire situations.
Well, it's in hindsight, it was really sound advice.
That is true.
Um, let's move to life insurance. So what's new in that specific sector?
Yeah, so that's been interesting because for people who are applying for independent life insurance, or actually I do quite a bit of disability insurance as well. Part of the process is you have a mini medical exam, and so a paramedic examiner comes, does blood work, and with shelter in place, we're not doing that right now. So most of the life insurance carriers that I work with, and the primary one I work a lot with is New York Life, they have put into place different ways for clients to still secure new policies if they're healthy, if they're under a certain age, if they've actually seen their doctor in the last year or two. And that's been a huge relief. It's always one of those things where, when there's a downturn and people look at their stock portfolios and they realize, gosh, I don't have as much money as I thought. Or I've had some clients who have been laid off and they had been dependent on group coverage through their employer. This is a reason that you should always have an independent policy that's not related just to your employer. So I've actually
Right.
had more inquiries for new life insurance coverage in the past few weeks than typical.
Oh,
And
yes.
and it's great. We're able to at least get the process started. They're able to have conditional coverage. We're getting medical records, and then they're able to get policies. And if maybe they could get a better health rating, they'll go back through underwriting when we're done with shelter in place.
I just had a vision of like someone trying to draw blood from 6 feet away.
Yeah, I have had a couple clients say, I'm totally comfortable with people coming into my house. And I have felt like, you know what, let's get the process started. We can get you conditional coverage. You don't need to risk your life to get this life insurance. And we'll take care of it, a month from now if you want to get the blood work done. It's a weird time. I mean, it's a strange time for every industry. And I think
We're all learning.
we're all
We're all
learning.
learning as we go along.
That's right.
Tammy, any parting helpful tips to people who may be watching this?
Yeah, I think like any time, just take inventory of everything that you have. I mean, I think it's a good time for people to be looking at all of their accounts. Have they reviewed them recently? Do they want any professional advice? Are their beneficiaries up to date? I mean, there's so many things that we're all so busy that I always say financial planning and insurance planning is in that quadrant of important but not urgent until it becomes urgent. And so I think during times like now, just, schedule an hour or two with yourself, or you and your partner, you and your spouse, and just do an inventory of what you have. It'll give peace of mind.
Very good, very good. And what is the best way for people to reach you?
Thank you for asking. Either calling my office, which is 510-433-3109, or send me an email, and it's Tammy, Tammy, at tpofinancial.com.
Thank you so much for joining me today and for answering all these very relevant questions for everybody. I hope there was a lot of value here. And thank you so much, and stay safe.
Thank you, and thanks for the opportunity. Stay safe and healthy, and I will see you in person when we get to the other side of this.
Definitely. Thank you, Tammy.
Okay, bye-bye.
Hello, everyone. I'm Richard Wong of Viridian Mortgage, and welcome to Ask and Answered, a video series that I created highlighting mostly attorneys dealing with COVID pandemic-related issues. In this day and age of constantly streaming information at our fingertips, it's sometimes easy to fall prey to sensory overload. And so the goal of this program is to hear firsthand from those professionals who are the experts dealing with these issues on a day-to-day basis and providing us with the clarity and direction we need during these challenging times. Thank you for watching. Be smart, stay safe, and take care.